Well, first of all, we'll do a review of my screen setup. We'll then be creating a watch list from the review. So how do I choose the currencies that are tradable and not tradable? We will then be going through the topic of today's webinar, which is optimal entry points. Ultimately, what we're looking for are high probability setups, an entry that's got more chance of returning me a profit than a loss. Okay, sometimes it requires a bit of patience when looking for these entry points. So that's what we'll be covering today, optimal entry points. We'll then have a brief summary of the key points, and then we'll go through some questions and answers. Now, I can see the questions coming through, and if there is a question that comes through that's relevant at that particular moment, then I'll answer that question. But if there's a question that I see come through, I may leave that to the end of the webinar. So there will be time at the end of the webinar. So if you do have any questions, just type them through. Okay, right, let's go straight to my screen setup. Right, so what you can see in front of you is the software that I use, which is eSignals Advanced Get. And in front of you is a very typical setup of what my screen looks like. So on the left-hand side, I have my watch list. And you can see here, it's quite an extensive watch list. So it goes all the way down to the South African Rand, Japanese Yen. So I look at everything from the exotics to the South African Rand, Japanese Yen at the bottom. And in front of you also at the top, we've got the weekly time frame and also the daily time frame. So the weekly time frame is Big Brother. So the weekly time frame is basically giving me trend direction. Is the market in a bull trend or a bear trend? So, you know, the overall market direction. And at the bottom, we have the daily. The daily chart is where I look for my entry and is where I manage my stops. So let's start with the weekly time frame. I'm just going to open that up. Now, currently it's the naked chart. So I'm going to load up a couple of indicators on here. The first indicator that I'm going to load up is the 200 moving average. Now, the 200 moving average is just basically a major area of support and resistance. That's all it is. So when price gets anywhere near the weekly 200 moving average, there is a potential for it to bounce to the upside. And when it comes down, there's a potential for it to either break or bounce to the upside. In this case, you've seen that price is broken through and is below the weekly 200 moving average. So the weekly 200 moving average is an area of support and resistance. I also use these pink lines. So these pink lines also represent major areas of support and resistance, but what they represent are the highs, the lows, and the closing price of the previous years. So if you look here, we've got the PH high at 1.0601. This is the pink line high of 2013. As we are in 2014, this is the pink line high of 2013. At the bottom, we've got the pink line low of 2013. And just above that, we've got the pink line close of 2013. To the left here, we've got the low of 2012, the close of 2012, the high of 2012, so on and so forth. So these represent, for me as a trend trader, major areas of support and resistance. Also, to simplify that even further, I only take the previous 2 years into consideration. So as we're in 2014, what I'm looking for is 2013 and 2012. Also, what I like to look at is round numbers. Now, round numbers also act as areas of support and resistance and potential target levels. So what do I mean by that? Let's have a visual idea of that. Imagine price is below your floor in your room. Price is below your floor. So the floor is currently acting as an area of resistance. When price breaks through that floor, your floor now becomes an area of support. So where is price now likely to head to? Price is now likely to head to your ceiling. So that is the next round number. So if you look on the right-hand side, what we've got is 0.9 right here. And price is above 0.9. So what I'd like to see is price head towards the figure 1. However, we've also got this pink line in the way acting as resistance. So what we'd like to see is price head towards the pink line, break this, and then head towards the weekly 200 moving average and the figure 1. When it breaks the figure 1, then it's got these pink lines to contend with, but ideally we'd like to see it head towards figure 1.10. Okay, so round numbers act as good potential target levels. Now, if we go down to the daily time frame, the pink lines basically represent highs, lows, and closing prices of previous years. Now, when I say closing price, I mean 11:59 p.m. on the 31st of December. That's the closing price. And then the highest price reached in that year and the lowest price reached in that year. So major areas of support and resistance. If I just compress the page, you can basically see how price sort of tends to stay between these levels. And if it does break the level, then it creates new highs and new lows. So 52-week highs and 52-week lows are very important and very significant levels for price action. And that's it for the weekly. Very, very simple. Now, the daily time frame. Again, what you're looking at is the naked chart, but I do load up some I do use some indicators on here. So the first indicator that I use is the daily 200 moving average. Now, the daily 200 moving average also acts as an area of support and resistance. You can see that here, price trended away, pulled back to the daily 200 moving average, found an area of resistance, and then trended back down again. So the daily 200 moving average does act as an area of support and resistance. However, there's also one other use. When price is below the daily 200 moving average, that is considered a bear market. And that is when we're looking for shorting opportunities. So below the daily 200 moving average, this is where you want to be trading. Now, at the point here where price is pulling back, this is where you don't want to be trading. The market's going up, but you're below the daily 200 moving average. When it bounces and starts heading back down again, this is where you want to be trading again. So when you're below the daily 200 moving average, that's a bear market. You want to be looking for shorting opportunities. Now, if you look at recent price action, we've now broken the daily 200 moving average. So this is now considered a bull market. So what we're looking for is buying opportunities. This philosophy that I'm using the daily 200 moving average, this is a philosophy that's been in existence for a very long time. This is not something that I've created. If you've heard of the turtle traders used this philosophy. They used the daily 200 moving average to give them a bias in price action. When price was below, it's a bear market. When it was above, it was a bull market. Now, if you look at this pullback took place from September all the way through to sort of October, November times. You're looking at a good 2 months. So what you're in this period right here, you'd be standing aside. You wouldn't be doing anything. That is a simple moving average. Okay, it's a simple moving average. 200 simple moving average, guys. Okay, I hope that makes sense. Now, let's move on. I'm going to add on another set of indicators. These colored bars are a proprietary indicator provided by Advanced Get, which is XTL. XTL stands for Expert Trend Locator. Now, you can see that what it does, it gives you these colored bars, red, black, and green. The logic behind this is very, very simple. Now, when price is in a bear trend, the bars are red. When price is in consolidation, the bars are black. And when price is in a bull trend, the bars are green. So what you're looking for is basically price below the daily 200 moving average and red bars. And when price is above the daily 200 moving average, you're looking for green bars. So you can see it in recent times. What we've got is a daily 200 moving average. Price is broken above. We've got green XTL bars suggesting further strength possibly. So things are looking interesting and a potential trend reversal here.